Japan has attracted a record 67.5 billion in foreign inflows into its bonds and stocks in April 2025, the highest monthly figure since records began in 1996. This reflects a growing shift by the global investors away from US assets amid concerns over rising tariffs, potential stagflation, and political pressure on the Federal Reserve. About two-thirds of the inflows went into the Japanese bonds, viewed as relatively undervalued and stable amid a still weak yen. This move highlights Japan's rising appeal as a safe haven in a volatile global environment. Hello everyone, welcome back to our channel and welcome back to this video. In this video, we wanted to share with you that as the global confidence in the US markets is wavering, Japanese assets have become the unexpected safe haven. A quiet shift is unfolding in the global capital flows, one that speaks volumes about where the institutional investors believe the world's economic risks and rewards now lie. In April, Japan attracted a record $67.5 billion in net foreign inflows into its government bonds and equities, surpassing all prior monthly records dating back to 1996. This surge underscores a significant trend. Global funds are increasingly reducing their exposure to the US markets and reallocating capital to where they perceive is a more safer and more stable alternative. It's important to note that while Japan's domestic fundamentals haven't dramatically shifted, several external forces are reshaping the calculus for the investors, like rising tariff risk in the US, uncertainty over the Federal Reserve's independence, Japan's safe haven appeal is rising, and the bond market is leading the way. Let's do a deep dive into each of these factors. First and foremost, the rising tariff risk in US. Now, as the US administration pushes forward with an aggressive trade agenda, raising tariffs and threatening new barriers, investors are beginning to price the risk of stagflation, a protectionist stance that raises costs without boosting productivity or growth, particularly worrying for the fixed income and equity holders. Second, the uncertainty over the Federal Reserve's independence. Now, President Trump's recent demands for the Fed to cut interest rates have fueled concerns about the political interference in the monetary policy. This credibility of central bank independence is the foundation for US capital markets, and any perceived erosion can shake investor confidence deeply. Third, the Japan's safe haven appeal is rising. Japanese financial assets, long viewed as conservative and low yielding, are suddenly gaining favor. A still weak yen makes them look undervalued to foreign buyers. Meanwhile, the country's reputation for institutional stability and predictable policymaking is serving it well in this volatile environment. Lastly, the bond markets that are leading the way. Around two-thirds of the foreign inflows have gone into the Japanese government bonds. This reflects not just a flight to safety but also tactical allocation. Japan's negative real yields are seen as more predictable downside compared to US assets now facing political and inflationary headwinds. Now, this surge in the Japanese inflows is not just simply about chasing returns. It reflects a deeper global recalibration that is happening. As investors reassess as to where macro risk, geopolitical, monetary, and trade-related are most concentrated. When the US has long been the gravitational center of global capital, the current environment suggests a more fragmented future. As funds rebalance, Japan, once seen as a stagnating economy, may emerge as one of the few financial sanctuaries for an increasingly uncertain world. This is what we wanted to share with you in this particular video. Hope you've enjoyed this video. Do stay tuned in for more.